Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, February 6th, 5:31 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the O'Neill follow-through days back at the beginning of November. You can see the trend gauge over here. Some improvement today, not reflected on the gauge. I'll tell you why. Market leaders still holding up fine, a bit of a pullback in some of the extended AI networking type names. All five of the major indexes that we track trending mostly above their short-term 21-day moving average, medium-term 50-day moving average, and long-term 200-day moving average. I'll point out where they're not. First of all, small caps, multiple closes below the 21, had a single close below the 50 yesterday, but got back above it today, which is good. The slope of that line is still in an uptrend, so it's would be a surprise if you broke down below it with as sharp as the slope of the line is. Mid caps, one closed below the short-term 21-day yesterday, but back above it today. We'll keep these on here, looking for at least a 2-day trend one way or the other. So one below, one above, we get a second back above, then these will come off tomorrow. But a good sign today with better performance from small and mid caps, but and that improved the breadth numbers, but still some work to do overall on the index charts. So what happened today? A little bit of change from the norm. Tight consolidation day, but a lot of rotation between sectors as tech lagged and money flowed into the more value type sectors. And as I mentioned, leaders taking a bit of a break today, especially leaders related to AI. So here are the final numbers. The big seven down 0.46% on the day. RG8s, our 8 growth ETF composite, up 0.80%. S&P 500, tight range all day. Less than 0.5%, closed up 0.23. Broad equal weighted up 0.63. This is how you know breadth was good when the RSP is better than the S&P market cap weighted. NASDAQ 100 lagged all day. As we mentioned, tech pulled back down 0.20%. Equal weight was green. Dow up about 0.4, mid caps up about 0.5%, Russell 2000, small caps up 0.85%, global 60/40 up 0.5%, in-house GROTECTION positive by 0.24%. Let's get into some charts and then the tail of the tape. We'll start with the S&P 500, and you can see after the Jerome Powell close at the lows, semi-panic last Wednesday, we recovered on Thursday, made a all-time high on Friday. Two nice tight consolidation days inside Friday's bar or candle above the 8-day exponential moving average. Fantastic action. Let's take a look at it on a 15-minute chart. And you can see here is the big breakout, and here's 2 days within that range. Nothing wrong with that at all. One thing we want to keep an eye on is yesterday's lows of 49.18. This 49.20 level, you can see how it was a bit of a resistance support area back here a couple weeks ago, 2 weeks ago, less than 2 weeks ago. So onward to the NASDAQ 100. You can see how there's been a little bit of lag on a relative basis over the last 2 weeks, and this 430 level has served as resistance for 1, 2, 3, 4, 5, 6 out of the last, looks like about 10, 12 sessions. So a breakthrough there, and we're not that extended from the S&P, from the 50-day moving average. 5%, bit on the high side. Over 6% is considered extended from historical purposes, but go too tight inside days versus Friday's bar, again, good stuff. Dow Jones Industrial Average continues to trend higher along the 8-day EMA. Despite a bit of relative weakness, but nothing wrong with there. Solidly above the 38,000 level, and now the 21-day moving average is going to cross above that 38,000 level. Here are the problem. Mid caps, not quite as bad. You can one close below the 21, close basically about 0.1% above the near flat 21-day moving average today. Note the terrible strength over the last 5-6 weeks. IWM, small caps, close below the uptrending 50-day moving average, got back above it today, so that makes yesterday's lows critical, that 190 level, which price has memory. You can see 190 playing a role going all the way back to June of last year. For a clean break of it here in the middle of December, now back testing it a second time this year. Next up, we need to get back up to now declining 21-day moving average. That's small caps. Let's go to the VIX. VIX down 3 days in a row now, down 4.5% today, back below the 21-day moving average, basically sitting right on the flat 50-day moving average. We want to see this stay below 15 and this declining 200-day moving average, so nothing wrong with that. US dollar down and got weaker as the day went along. So this breakout level of 104, we want to monitor that. You can see we poked our head above 104 back in December, harsh sell-off, then some strength, and breakout above that 104 level on Monday. Took back about 2/3 of that move today. So we want to see when the dollar pulls back into this 104 area, what happens, because it does have an impact, either a tailwind or a headwind on stocks. GLD, gold up 0.5% today. This is, near all-time highs, really in a consolidation level. Gold stocks is really what have not been well, but up 1.32% today. Bitcoin showed a little bit of strength today relative to yesterday's close, but still hanging right around this 50 and 21-day moving average, and the 8-day moving average is thrown in there. Note where we've got our alerts here. We will take a position if this breaks above this level, which would be all three of the moving averages. On to bonds now. Broad bond index BND, some strength today after a harsh 2-day sell-off, meaning rates up for 2 days, now pulling back. Here's the long bond price up, meaning rates pulling back. We'll show the 30-year bond here, TYX. Rates down by 1.13%, and the long bond, or I'm sorry, the 10-year TNX down 1.78%. Let's go to the tail of the tape now. You can pause this. I'll hit the highlights. As far as things impacting the markets, Fed's Meester, she's hawkish as always. Gradual cuts, she said, later this year. Market sold off briefly on that before rallying into the close. Day count, 2 days up, 2-day consolidation, 4 days above the 8. EMA, 22 days above the 21-day moving average. Tight all day was really the story of the day, and rotation taking place. And this is why we love the S&P 500 with leveraged ETFs, because every time that rotation happens, it occurs within the S&P 500, and we don't have to worry about timing sectors. We do from time to time, but only when it's apparent that it's a good risk reward. On the upside, oil services, defense stocks, as in aerospace defense, transports. China got a boost, and that boosted emerging markets as they're trying to prop up their stock market. Jets, and then basic materials, industrials, healthcare, and real estate on the upside. On the downside, the dollar, semiconductors taking a break. Regional banks continue to suck. XLCK as tech pulled back. Portfolio, we trimmed Lilly. I'm going to show this action in a bit as it gapped up and then reversed hard. So that big gap up on earnings was sold into. We took our profits on that, still holding a quarter position. And we trimmed Uber as our earnings risk calculator told us we needed to slightly take off about 10% of the size as it reports earnings tomorrow morning. And a big gap up today, Palantir, we took a starter position in that. Net with these changes, our adjusted beta right at 1.3, basically in line with what it was coming into the day. So the bottom line of the day, tight range consolidation, rotation, tech rests, money flowed into value names. Let's get to some charts now, and we'll start off with Lilly, which was our largest position going into earnings this morning. And it was rallying after hours. It gapped up on earnings, but when your opening tick is the high of the day, this was very clearly sold into. Not a big deal. We book high teen gains on this. We still have a quarter. We'll use the 8-day moving average for the remaining quarter. And see if it bounces off there or not. We haven't even hit pivot plus 20% from this most recent base breakout, although we did hit pivot plus 20% from this gap up day. at the beginning of the year. So we'll see how it acts now. Two gaps in a row, a little too much in hindsight. Taking some off at the opening, the initial gap would have been the optimal play, but we don't have a crystal ball here. But we'll free up that capital for some better opportunities. So trimmed ELF on the pullback after the gap up. 3 times the market gains during this holding period, so beating the 2 times which we always strive for. So there's Lilly. Uber making highs into earnings. Nothing wrong with that. Well, that's what Lilly did, and Lilly reversed. So we don't want to see a repeat of that, but we'll judge the action again. Relative strength line at a new high. Also, that was not the case with Lilly. Let's take a look at that. So you see price at new high, but on a relative strength basis, just right where it was when the price was down in the 620s back in October. So optimal is for price to always be relative strength always to be making new highs along with price, and it just didn't. So there's Uber and Palantir, big gap up, massive volume, biggest volume ever. There are some stats that say stocks that do that tend to go higher. 709% volume, great stuff there, up 31% on the day. We got in right below the 21 level on this after the gap. Let's look at a 5-minute chart here. You can see quick move up, pulled back. We were waiting on, we had the 5-minute. Let's take a look at what we were doing here. We'll put stochastic on and a 5-minute, and this pullback to this 5-minute, and then it hooks back up. That was our entry under 21. Did the same thing during the day. So when we're stalking something and it's extended, we go to smaller time frame charts to get a low risk entry. You don't want to buy it at the top of that 5-minute range because you're almost guaranteed to be going lower in the immediate short term after that, and the best trades work right away. Okay, so that's Palantir. Let's take a look at a couple of earnings reactions. Spotify gapped up on earnings, but as is the case with Lilly, was sold, not from the immediate tick, but as the day went along. So kind of a bit with the market environment, but it did have a nice move up going into this, and it did hit pivot plus 20%. Let's see what else we wanted to. Oh, Celsius coming back onto our radar as 3 tight moving averages here, 4 tight actually, including the 200. Move up on some volume today, puts it back above there as it tries to make the right side, form the right side of this base. Kava, some volatility here. We got an alert that it went above 50. This is considering adding a position in this. 50 often acts like a century level, a Livermore century level, the 50 level. You can see it failed on Friday, and it failed again today, getting back above it. Some volume came in, but it undercut and reclaimed the 8-day exponential moving average, so it's hanging tough there. That's a pretty decent looking cup base right there. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner Dan Stewart can be reached at dan@revereasset.com. Remember, it's not how much you make in the markets, it's how much of that you can keep. That's why our flagship portfolio and approach is named GROTECTION, to grow assets in uptrends and protect them in downtrends, such as the 2022 bear market, the COVID bear market, and using the power of trends over short term, medium term, and long term keeps us on the right side of the market, prevents us from arguing with the market no matter what the news is or what the opinions are. And with that, I'll wrap it up for today's video for February 6th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.